What's up everyone, welcome back to my channel, welcome back to a brand new video. I hope you guys are doing good. I hope you had a great week. Today I decided to do another Forex strategy video. In today's video I'm gonna show you a supply and demand strategy you guys can use. It is really easy to follow and to understand the rules. So yeah, if you wanna learn everything about the strategy, make sure to stay till the end of the video to make sure that you understood everything. Feel free to also note down things that you find important. Feel free to also share and like the video. If you have any questions, make sure to drop them down below. And before I start the video, if you want to learn the strategies I use or do a one-on-one session with me, make sure to DM me privately on Telegram. My link will be down below. Also, the link of my free signal group is down below, so feel free to join as well. My IG and websites link are also down in the video description. Okay, so let's just jump straight into the video. The strategy is really simple. Let me quickly explain you how we can trade using supply and demand. So basically, a very important thing we need to follow is market structure. So let's do a bullish example. So higher high, higher low, higher high, higher low, higher high, higher low, higher high. So for supply, we have to draw our zone exactly from where the new impulsive move started. We can either take the last down candle before the bullish move happened, or we can approximate by drawing a zone. Okay, right on wait a second, right on the higher low right here. So you would do this, and then when price comes back, I would suggest to look for a confirmation entry. You can go around it two ways. You can either do a buy limit set on the top of the zone with the stop loss below, or if you have more time, you can wait for price to come into your zone, throw a candlestick pattern, and then enter the trade. Okay, this is what I suggest, because like this you will get a better accuracy. Whereas if you just place buy limits or sell limits, you will see price sometimes will just go through your zone without throwing any candlestick confirmations, and there would have been any reason for you to get into that trade. Okay, so in my opinion, you should just wait for price to get to your zone, and then wait for a candlestick confirmation. Okay, so the same goes for sells. I'm actually gonna show some sales example, I think, because I'm gonna take some very recent market structure, so you don't say that I just went 3 weeks ago and cherry picked some entries. I'm gonna do some bar replay. So you know what, let's just get into the bar replay. Okay, so I'm just gonna go on the 6th of May. 6th of May was the last Friday, I think, something like that, if I'm not mistaken. So very recent. So what you want to do is you want to firstly start on the H4, determine your trend. You can just simply do this on the H4 to determine your trend. Then you go to the H1 and see if that trend is valid, and we can see that the trend is valid. Yet on the H1 we had a break of structure, but this might still be a fake out, and price might go to the downside, because we know that on the H4 this on the H4 a previous strong lower high was taken as well, but still our swing lower high is this one up here. Okay, so we can still be like, okay, we are still bearish, and then we can go on the M15, and that's where we are going to look for supply and demand and for possible entries. Okay guys, so it is very simple, very straightforward. I'm just gonna play the market. And oh, by the way, just saw a possible entry right here. So we have this zone right here, okay, because we created a lower high, we created a new lower low. So our previous zone, our previous very important zone, it is this one. Okay, So what we do, we wait for price to tap our zone. It threw a pin bar, so we would have entered a sell right here at the candle closure, stop loss right above the zone, and we can do two things. We can have a fixed take profit, or we can just aim for market structure. Okay, so we can aim for this most recent lower low, which is almost a 1 to 2. And I suggest when price gets in 1 to 1 in profit, I suggest moving stop loss at break even. Of course, you can aim for these lows right here, which would give us a 1 to 3.5, but let's say we play it safe and we only aim for a 1 to 2. Okay, let me actually put the take profit at 2. Okay, so right now we would have been 1 to 1 in profit, so now we would have been risk free. Let's see if it takes us out at break even or if it continues to go our way. And guess what, it took us out at break even and then it smashed our stop loss. So instead of taking a loss, we didn't lose anything, okay, because we ensured our stop loss at break even once we went 1 to 1. And yeah, eventually our take profit would have been hit, but the stop loss was hit first. Okay, so now we have a new supply zone, a new zone right here. We can take this whole zone if we want to, or we can just take the wick. It's up to you. I'm gonna take the whole zone and I'm gonna wait to see how price reacts to the zone. Okay, so let's play price forward to see what's going on. Oh, and this right here is a bearish engulfing, and I would be very happy to enter a sell right here, stop loss right above that wick, and I would aim for, let's see, let's go a bit riskier here. I mean, those are the most recent. Yeah, so no, this won't be a very high risk to reward trade. It's gonna be a 1 to 2 as well. Let's see if we manage to get a take profit. So the same exact concept, okay? Why? Because this was a lower high, this was a lower low. You can see it broke this lower low. So we are taking this zone as our possible entry zone. We know that we are in a downtrend. So therefore, we only take sells, okay? So let's see how market plays. All right, we are 1 to 1 in profit. Let's keep on moving to see if we have a, okay, TP smashed right here. Great. Very good trade right here. TP was smashed. Now let's follow the price to see if we get any more entries. Right now I would take this as my, where would I take my zone at? So if I want to be really conservative, I would take this. If I'm being honest, I would take this as my zone. Okay, so this is also about your intuition. Okay, so some people might be aggressive and take this as their zone. But if you are aggressive, you will find out that you'll get into more trades, but your win rate will be also smaller. So if you are comfortable with that, then that's not a problem, okay? But if you want to be more conservative and have a bigger win rate, then you should place your zones accordingly, okay? So moving on, let's see how the market does, what the market does. Okay, so if I'm being aggressive, okay, I could place a new zone right here because we created a new lower low from this right here. Let's see if we get a candlestick confirmation. And we actually did, not a very strong one, but we did. So and this is another very important rule. So if you see that let's say right here you could have entered a sell right after this doji, stop loss right above, and then you would have aimed for what? You would have aimed for this low. Okay, so if you see this, you should not take the trade because it's gonna be a negative risk to reward ratio and it would not be worth it. Okay, of course you can see that the trade hit the take profit, but it was a 0.6 R, so I wouldn't have taken. Okay, so this is also something you can consider. Even though it hit the take profit, the stop loss was too large and the possible take profit was too small, considering we aim for next market structure zone, okay, next lower low or next higher high. So now we can see that we broke a minor lower high right here, because a major lower high would be this one, in my opinion. So if you want to be aggressive, we can take this as a buy zone, okay? But this is a very aggressive play, okay? Because we know that we are in a downtrend, yet we still want to catch a buy, but not for long, not for a very big amount of pips. Let's say if we can actually catch a buy. Let's see. Oh, and we cannot catch a buy. So this is exactly why I said that it's better to actually wait for candlestick confirmation than placing a buy limit, because you could have placed a buy limit right here. You would have placed a buy limit right here, stop loss underneath, and check what would have happened. Your stop loss would have been hit. Why? Because you didn't check to see if there was any candlestick confirmations. Okay, so now a new lower low was created. This would be my zone, and this is a very good zone in my opinion. Let's see if price retraces and gives us an entry, and it did. Okay, it did. This is a very good entry, and I would take it, even though the stop loss might be 1-to-1 in terms of the risk with the take profit. So take profit, stop loss would have been there, and my take profit would have been here, and 1-to-1 would have been achieved. But you could also do this. You can also go on the H1, zoom out, and see if you have anything to the left. If you don't, and here we didn't have pretty much anything, we saw that we had this strong support, so a 1-to-1 would have been wise. So that's what we aimed for. Of course, you can also play it where you can trail your stop loss. Okay, so you could have trailed your stop loss here as well, and I'm going to show you exactly how. But first, let's see how this trade played out. So 1-to-1 smashed. In total now we won two trades in a row, 1-1-2 and 1-1-1. If we risked 1% per trade, we would have made 3%. Let's see if we get anything else, and this is a new zone right here. I am happy to take it. Let's see if price retraces and gives us an entry, and no, it looks like it doesn't. And yeah, it doesn't give us an entry. Okay, so now what can I do is I can play a bit more aggressive and choose this as my zone, see if it comes back and enter a quick buy. Okay, let's see if it does. Looks like okay, so it did came back, and it throw us a very clean pin bar. We see some seller exhaustion right here, so I would have entered a buy right after this pin bar, stop loss right below our zone, and 1-to-1 was achieved right here. So now our stop loss is at break even, and I would have aimed for this high right here, which would give us a 4.5 R. Really good in my opinion. Let's see if we get it. Looks like it might get us out a break even. Let's see. Or oh, nice, very nice. So TP smashed a 4R trade, 4.5R trade smashed. Really good actually. And now we can see that it came back to this zone. Let's see if we can get a quick sell entry. I wouldn't have entered here, is a bit too far for me. Let's see if we can get here something, because I would more likely enter in my zone to get a bigger risk to reward. But let's see. And yeah, I would have entered right here after this pin bar. So yeah, pin bar and dojis are, in my opinion, the best candlesticks pattern you can use. And I would have done the exact same thing. So I would have stop loss above, and I would have aimed for this zone right here, for this one right here. Maybe I would have put it a bit above. So 1-to-1 was achieved. We are now with in a risk-free trade. So let's see if we can hit the take profit, and take profit hit, and then it reversed, probably because of the news. And as you can see, we have a 5R, a 4.5. So that's so 5.3 plus 4.5 is approximately 10R. Okay, plus 3R, you would have made 13% in 6 May in 4 days. So in 4 days you would have made 13%, risking 1% per trade. That's a FTMO challenge passed using this very simple strategy. As I said, it's very simple. You go on the H4, you check the trend, you check the same trend on the H1, but you keep the H4 trend in mind. And then on the M15, you just go follow market structure, place your zones, wait for candlestick confirmation in your zones, and then you just enter. Okay, the strategy is very simple to use, very self-explanatory. And what I wanted to show you is you can actually also trail your stop loss in profit if you want to catch a bigger swing trade, a bigger risk to reward trade. But you have to follow the market structure. Okay, it's a bit more advanced. So let's say you would have entered here. Okay. The horizontal ray will be a stop loss. So you would have placed your stop loss above the previous lower high. Okay, so this was the most recent lower high. Then price came, went up again, went down. So now you would have took your stop loss and you would have placed it above this lower high. Price came, took this zone, went even further down. You would have taken your stop loss and placed it here. Then you would have entered this trade as well. You would have placed this trade stop loss here. And as you can see, your trailing stop would have been hit. It was basically the same trade, 1-to-1 as well, because if we extend it till here, it's 1 to 1.2 or something like that. So not a big difference. And we would have got out of this trade right here as well when it came back up. So instead of catching a 1 to 2, how we initially caught, we would have caught a 1 to 3.7, okay, if we used the trailing stop technique. This is more advanced, but you should just pick one method you want to use if you want to use the structure as I showed you, or if you want to use trailing stop loss to try and catch a bigger move. Okay, in my opinion, you should just use the market, the structure of the market as your take profit level. It's a lot easier to follow, and the accuracy will be bigger as well. Okay, so yeah, this was it for this video. I really hope you enjoyed it. This strategy is really effective if used correctly. Of course, you will get losses with it as well, but if you stick to the plan, if you use good risk management, you'll be profitable with it. All right, so if you have any questions, make sure to drop them down below. Feel free to DM me on Telegram if you want to do a one-on-one session with me, or if you want to learn my strategies. Also, feel free to join the free signal group. All the links are in my video description. Okay, so have a nice weekend, everyone. I will see you in the next week. Goodbye.